So Betfair trading works really well. It's probably the best betting strategy that has ever been invented. And it works well in a variety of different markets. However, there are different ways to approach the market, but there's one core fundamental that you need to really truly understand, and that is how to frame your trade. So that's what I'm going to be looking at in this video. If you're interested in Betfair trading and you want to learn how to trade, then visit the Academy where you can do exactly that. If you want to talk to professional Betfair traders, then why not head over to our forum where you can talk to like-minded people, but you can also download additional content. And don't forget to head over to our website to download a copy of BetAngel, the cutting-edge software that will completely transform your trading. So first off, let's define exactly what framing a trade is. When we talk about framing a trade, you will know already that you need to win more than you lose when you trade, to simplify things. And when you look at a particular trade, you're going to want to get into the market at roughly the right sort of point. But if that trade goes wrong, then you need a point at which you're going to get out. So when you frame a trade, you're basically saying, this is the point that I'm going to get in the market. This is what I expect to happen to the market. And this is the point at which I realize that it's all gone wrong. This is how you would frame a trade. And the reason that you're doing that is multifaceted. Basically, you want something that you can replicate, but you also want something that you can gather data on, that you can adjust, modify in order to bring yourself to profitability. Because ultimately, it's a little bit more complicated than winning more than you lose. You're focusing on how often do you win, how often do you lose, how much do you win when you win, and how much do you lose when you lose. And when you analyze that data, that will say to you, oh, this part of that equation is slightly wrong. You should, modify or amend that or perform a bit better, which could mean a better entry point, a better exit point, or perhaps a better execution, something like that. But by having structure, you'll actually be able to modify and improve each one of those aspects or one specific aspect, and that will turn you profitable in the long run. So by framing a trade, that gives you the ability to produce something where you have some metrics that you can measure and improve on, but it also gives you something that you can replicate. You can look at a market, you can say, okay, this is what I'm going to do in this market based upon all of my knowledge and skill and my interpretation of what's going on within the market. And then you can identify moments within the market that match the sort of criteria that you're looking at. That allows you to replicate it as well. So now that we understand specifically what framing a trade is about, let's have a look at how you do that on 3 different types of sports betting markets. So if we look at this market from Kempton, which was one of the bigger races last Saturday, you can get a good idea of how you would particularly frame a trade. If we look at the market from an hour 20 out, you can see that the way that the market looked, it's quite a competitive, higher quality race. And you can see there's a lot of indecision within the market in terms of the way that people are looking at it. Nobody can decide who really should be the favourite. They're all sort of heavily interacting with each other, but nobody is the clear favourite in this market. Then if we actually look at the market about 6 minutes out, you can see that basically not much has changed. So you can tell from this particular market that the traded range, the amount of money that is within the market, fits within a nice sort of frame. And if you're at the top end of that traded range, you may prefer to back. And if you're at the bottom end of that traded range, you may prefer to lay. But essentially what you're doing is you're sort of capping your loss by getting into the market at roughly the right point. There's a point within this market where people are no longer willing to back a particular horse. There's a point in this market where people are no longer willing to lay. So by biasing your trade in that direction, not only do you limit your loss, but you expose yourself to potentially more profitable situations. And therefore, in your overall trading expectancy, that works sort of nicely in your favour. Now, one of the things that I do very often on videos and markets that I record is I play them back but at higher speed, because you get a different perspective on the way the market works if you do that. So if we speed up this Kempton race and play it back for you, you can see that what actually happened was there was a little bit of movement on 2, some movement on another 2, and they sort of balanced each other out, but the market more or less stayed within that particular traded range. Now, I know that we're looking at this retrospectively, but what you will find if you trade enough markets and you become a little bit more skilled at this is you will see these patterns continue to repeat. So you will see markets that are set up like this tend to behave in a similar manner, and that will give you more confidence when entering a trade because you'll be able to do so at a point within the market where losses are less likely. And fundamentally speaking, if you can reduce the amount of losses that you're likely to make, that will necessarily help your overall profitability by default, because when losses occur, they're slightly smaller than you would get if you just went in at random. And of course, the potential for profit is always there. And fundamentally speaking, that's one of the reasons that you should frame a trade, is because you're trying to tip that equation in your favour, and that's effectively what we would have done on this particular horse racing market. Now, if we look at football, what I've done here is I've actually captured a screenshot of Soccer Mystic, this specialist football profiling tool within BetAngel, at half time on the Brentford v Manchester United match, and we're looking at the under 2.5 goal market. But one of the features that we have on Soccer Mystic is you can actually put a thing in there called a profit line. And what the profit line is doing for you is it's effectively framing your trade, because it's basically saying to you everything below this particular line is back value. In other words, if you think that this is going to happen, you should be backing first, and all of this area below this particular line is potential profit if you're backing. And if you look on the other side, then it's basically saying, well, if this scenario occurs that you've plugged into this particular model, then this is the period of time at which the market will be lay value above this particular point. So by messing around with all of those numbers on Soccer Mystic, you can begin to get a feel for a strategy that gives yourself the opportunity to profit. But on football, of course, and especially in play, it's all going to be about goals and the amount of time that you're in the market, or the amount of time that's left in that particular match. So if your overall objective when you're framing a trade on football is how long can I hold my position in the market for a tolerable loss, waiting for the situation to occur that I expect. That's fundamentally how you would frame a trade in football. And if you want to do that, then Soccer Mystic is a really nice tool to be able to do that, because you can plug in some numbers, it will throw out a lot of information for you, and it will frame that trade for you by saying, well, for X amount of time, you've got potential to profit here on the back or the lay side, and that allows you to understand exactly what risk that you're taking and what is required for a payoff. Now, if you look at tennis, you can do a similar thing. These are why these tools were created. It wasn't a bit of fun. It wasn't something that I did on an idle Tuesday. I wanted to figure out how best to frame my trade within a particular market. And when we look at tennis markets, we're doing a similar sort of process to the sort of thing that we did in football, but obviously football isn't tennis, and therefore we look at it in a slightly different way. So one of the things that I'm typically trying to do on tennis is I'm trying to say, where can I get into the market so that I benefit from a break of serve? And how long can I hold that position, or what path does the match have to follow? And if it all goes wrong, how much will I potentially lose? But how long can I stay in the market looking for that break of serve without too much of a loss? And therefore, what will be the outcome if a break of serve occurs? And the interesting thing about tennis is very often it's not a break of serve that actually necessarily produces this outcome. It can just be the potential for a break of serve. So I don't wait for a break of serve to be able to take my profit in tennis. Basically, if a player gets a couple of points ahead, then he sort of effectively gets a mini break within the game itself, and that's very often enough to be able to take my profit on that particular scenario. And of course, that occurs much more frequently than an actual break of serve. But fundamentally speaking, what I'm trying to do when we look at Tennis Trader is when you look at that set matrix, the middle line is basically, depending upon who's serving first, will be whether it's going with serve. But basically, when you look at the lines above the middle line, those are the odds if a break of serve actually occurs. So depending upon the path that the market follows through that particular market, that will determine your potential payoff and the potential loss that you're likely to take. And so when you're looking at tennis, that's effectively how you're framing it. You're saying, I'm going to get in the market at this particular point. I'm going to get out at this particular point when a break of serve occurs. And I know I can hold that position for this number of games based upon all of the potential scenarios that this particular match could follow. And then when the break of serve occurs, or like I've said, when the mini break occurs, effectively, you can actually trade out of your position. And that is how you would necessarily frame a tennis trade. But yeah, that was, if you use Soccer Mystic on football, if you use Tennis Trader on tennis matches, you will actually be able to get a good idea of roughly what you're trying to do and what payoff you're trying to achieve, and the sort of risk that you're likely to be able to take when you have that particular trade underway. So if you want to be successful at Betfair trading, in fact at any trading in any market, you've always got to frame the trade. You've got to basically say, I'm going to get in here, I'm going to get out there. That will give you a particular strike rate that you can work on and improving. But what you're effectively doing is you're trying to minimize the potential for loss, you're trying to maximize the potential for gain, and you're also trying to stay in the market for a reasonable period of time. And there are points within pre-off horse racing markets, within football in play, within tennis, where you can pitch your trade into the market at a certain point, which buys you a certain amount of time for the potential payoff to come. And if you know where that potential loss is going to be triggered, when that trade is likely to go wrong, then you can cut for a loss and you can manage that loss, which is obviously a key element of that trading equation. On pre-off horse racing, you're basically looking at a particular traded range and whether it's going to break out of that traded range. On football and over 2.5 goals, it's going to be the number of goals that are scored and the amount of time that you're in the market will define that. And on tennis, if you're trading the break of serve, you can actually frame it in terms of the period in which you're likely to be in the match, where the downside is relatively limited, but you also have potential upside. So fundamentally speaking, if you frame your trade, you will make yourself a considerably better trader.